Hi everyone, this is Sumaira Abdi and with me is Firoz Aziz of Anand Rathi Private Wealth Management. We're coming to you live from the news pit of CNBC TV18 and guess what? It's the 7th and every 7th of the month is Mutual Fund Day here, and joining in today for the celebrations and armed with an array of investment advice is Firoz. You know, Firoz, it's very, very interesting and I'm so glad that you're here with me today because the month of August has seen about 20,000 crore rupees of inflows into equity mutual funds, right? I mean, I don't know if it's the highest number ever. It does sound like it. It is, right?
Yes, 20,000 crores is the highest number ever. The average.
The monthly inflows.
Monthly inflow in equity funds alone.
In equity funds alone. Okay, so we always knew that there was a gush of liquidity coming in for the mutual fund industry and for domestic investors in general. A lot of people have invested and a lot of people are still waiting on the sidelines. You think the good run is pretty much done? Is there still scope for people who want to invest now to come in at these levels?
I think, of course, it is. Generally, you tend to see that at the fag end, there's retail participation. Is that what the situation is today? The answer is a big no, because we're going through a transformation. Last 3 years, corporates haven't done too well. So there is so much value packed in the market that people can take benefit over the next few years. So if somebody's waiting on the sidelines, should he step in? The answer is definitely a yes, because from a personal finance perspective, it's not 3 months, 6 months. You will have to plan your retirement as much as 10, 15 years. So step in as you go along. Yeah,
every time is a good time to invest in mutual funds, right? And it's only how you can gain or rather benefit from the magic of compounding. But Firoz, within the mutual fund space, where is the most traction? Because a lot of the investors seem to think that NFOs is the way to start, right? The new fund offers, a lot of them feel that the new fund offers, NFOs are available cheaper, there's more scope for growth. What do you say to these people?
See, NFOs are a no-no for a person who's starting for sure. Because if you have a pedigree of 10 years, 15 years of a specific fund, I would personally put my money there because there's already a track record, already trail and errors over, they've already set their objective right. NFOs are certainly for somebody who's taken most of the benefits and then he wants to do something very exclusive. Generally, NFOs are marketing strategies to create enthusiasm, so I would stay away from NFOs. And if you do the analysis of the last 20 NFOs done 3 years back, they have been beaten hands down by open-ended funds.
Yeah, and so to say, just a reminder that don't ever judge a fund by its past performance. It's not indicative of the future returns. The only thing it indicates is how well that fund is managed. And some of them actually are managed pretty well, because on top of your list of large cap funds, Firoz, you have the Kotak Select Focus Fund, am I right?
Yes. Kotak Select Focus Fund is a large cap fund. What do you mean by a large cap fund? The fund invests in big stocks. Out of the thousands of stocks, there would be large stocks, which is what it focuses on. So that's why it's called a large cap fund. Kotak Select Focus is one of the best funds you could probably look at in the large cap space, not from the retrospective basis, but from a prospective basis from the future. That's one large cap fund which you should certainly have in your portfolio.
Okay, in fact, we started getting some queries in. And Suraj Arora has a query for us. He says he wants to know a large cap fund because he wants to invest for his children. Is this the fund you'd recommend to him?
Certainly. If it's a large cap fund, Kotak Select Focus is one of the best funds you could pick up from the next 2-3 year perspective. You don't need a review for the next couple of years at least. That's how strong the future prospects seem for this fund. Yeah.
All right, so some more queries then, let's tackle them. Suraj Arora wants to know a good fund for his retirement plan, and Rajiv Kumar as well has written to us and he wants to know what's the best fund option. So I'll take both those queries and I'll toss it to you with a question of my own. Another fund that you have chosen from the large cap space is the Mirae Asset India Opportunities Fund, right? So this is a fund which has given a 5-year return of about 20-odd%. A 2-year return as well in excess of 20-odd%. So is this a fund that you would recommend to these people as well, and why?
See, one point which is very important, when you're planning a goal as large as retirement, can one fund house do the trick for me? The answer is no. You need to have complementary mutual funds which will actually take you through this journey. If it was a near-term goal, maybe 1 or 2 funds can do the trick. But if it's a retirement kind of a corpus, you will have to have 4 or 5 funds, because all mutual fund houses have different principles, different philosophies. Yeah. Funds have a different nature and objective. So make sure that you have a portfolio so that you are diversified and still not overly diversified, but there's a balance in your portfolio.
Okay, I don't know if this fund is in your coverage. It's called the ICICI Focus Blue Chip Fund. And this is a question sent in to us by Satya Subhash. He wants to know how the performance is and if it is worthy of investment.
See, ICICI Focus Fund has been a very good fund, but unfortunately what happens is, as the fund does well, the assets which it manages become very large for the fund manager to beat the market. So ICICI Focus Fund, I would not pick that. I would rather take in the same basket, ICICI's fund house basket is ICICI Top 100, which will do significantly better in my opinion than a Focus Blue Chip fund. From past performance, maybe Focus Blue Chip has done well. Like Sumaira said, past performance is not an indication of the future. A top 100 would be a more futuristic kind of fund.
Yeah, okay, so while we're at the subject of the ICICI fund house, how would you think of their balanced fund or one of their dynamic funds? Is that something also that investors could look at?
See, asset allocation, by which I mean how much in debt, how much in equity. If you're doing it yourself, a balanced fund becomes irrelevant. But if you're doing it, if you're not doing it, then definitely a balanced fund will help you mix this and delegate it to a fund manager. So point again, if you're doing your asset allocation and mixing debt and equity funds, don't ever touch a balanced fund. If you're not doing it, then delegate it to somebody who can do it for you.
Okay, so within the mutual fund portfolio that an investor has, right? So of course you have the large cap fund, you'll have a mid cap fund, perhaps even a multi-cap fund, maybe a debt fund. All of these are funds which are there. Coming to the mid-cap fund now, I've seen a lot of mid-cap funds have holdings which are actually large caps, right? So essentially what I understand from fund managers is that this is an objective which they have mentioned in as and when they start taking the investments, right, in the fund offer itself. What is the importance of this, and should an investor who's investing in a mid-cap fund actively look out for the investments?
See, the purpose, firstly, is it good, bad, we'll get to that. The purpose of having large cap stocks in a mid cap fund, from a fund manager's perspective, you know the inside story, is to create liquidity if there are redemptions. Generally, if a small stock or a mid cap stock has a large impact value, if there are redemptions, the fund manager can't sell these small stocks in a hurry. So large cap funds actually furnish liquidity pressures can be released for a fund manager. So be very careful when there's more than 10% in large cap, then I think he's diluting the objective of a mid cap fund. So there are several funds who restrict their large cap exposure in their funds to 10%. That I think is fair. Anything more than that, I think you're diluting the mid cap funds philosophy largely.
Okay, so within the mid cap space, then you like the HDFC Mid Cap Opportunities Fund. Why is that?
See, Midcap Opportunities Fund is a very good fund, reasonable sized. That's the first tick mark. It's 10,000 odd crores. The next very important tick mark is the fund manager. Chirag Setalwar, who's the fund manager, has shown capability of picking up stocks which are currently small and mid, which can become future large cap. So the capability of the fund manager to smell these businesses much before the market does is what you're hiring him for. And Chirag Setalwar has definitely exhibited that. So that's the fund.
Okay, some more queries coming in. Vidhay Vege has written to us and he wants to know if this is the right time to invest in mutual funds. Vidhay, let me tell you, you've tuned in a little bit too late, because the first thing Firoz and I spoke about was that it's never too late to begin investing. Every time is a good time to invest in mutual funds. Some more queries coming for you, Firoz. Ronak Bharadwaj has written to us. He says he's 28 years old. He has 25 lakh rupees to invest as a lump sum. His goal is 5 years. He wants to know about the dynamic asset allocation funds. Is that something that you actively see as well?
See, if you have 25 lakhs, which is your lump sum corpus, I would not suggest delegating asset allocation. The amount is large enough. If you had 2,000 rupees per month to invest, then definitely a dynamic asset allocation fund can be one thing which can be considered. If you have 25 lakhs and you have 5 years to go, then I would suggest looking at the situation, how the country is going to go through from a macroeconomic standpoint. At least 75 to 80% of your money should be in equity and about 20-25 in debt funds. And if you have equity funds, it's important to have a mix of 5 funds if you're putting almost 20 lakhs in them at once.
All right, and Ronak, my 2 bits on that is that you're only 28 years old. Unless you have an objective which is just 5 years away, you may actually look at lengthening your time horizon. All right, we have queries coming in, a couple of them actually, on funds managed by Reliance. One is from Piyush Agarwal, who wants to know how's the Reliance Corporate Bond Fund. And another query that comes in is from Kaushik Shakamuri, who wants to know about the Reliance Liquid Fund. So do you want to take the corporate bond fund first?
Yes, the corporate bond fund. See, the corporate bond fund of Reliance especially will be able to yield you about a couple of % more than a fixed deposit for sure on a post-tax basis. So Reliance corporate bond fund is a big tick mark for the fact that it buys corporates and the fund manager knows which are the corporates which are strong, which will repay the money. So Reliance corporate bond fund is definitely an inclusion in the debt side of the portfolio. On the liquid, I think Reliance has been path-breaking in terms of creating liquidity in the Reliance Liquid Fund, and it has facilities of redemptions over an app. So I think Reliance Liquid Fund is a pioneer in using technology to service the need of liquidity. So I think it very well replaces a savings account, and Reliance Liquid Fund actually replenishes all the requirements of contingency fund from a personal finance perspective.
Okay, so Kaushik and Piyush, I hope that answers your query. Saurav Bhutra has also written in to us. So Saurav, your first query we'll not tackle because it's on Ad Labs. We're not talking stocks here. Next, he wants to know, can I start with an SIP of just 1,000 rupees? Is any amount too small for an SIP?
No, I think 1,000 rupee SIP is a good start point. Very importantly, mutual fund industry is something which is so granular, and it actually can address the need of every strata. So if you started with 1,000 rupees, you've at least begun the journey. There are quite a few of us who actually have an inertia to start. So 1,000 rupees is a very good start point. But having said which, you will have to move to step 2 and step 3 and step 4, which is actually making sure that what your goals are, find out the value of the goal, and then discover what's the money you will actually need to put in to become financially independent and meet all your goals.
Yeah. So the magic actually happens not by starting large, but by starting early and to remain invested. And you know, somebody said, I forget who the author of this quote is, but it stays with me a long time actually. And it goes like this. It says, somebody is sitting under the shade of a tree today because somebody planted a seed. All right, so I hope that helps. Next up, we have Anand V. Sheth, who has written to us. So this is a good query because Anand says he's 23 years old. So I'm so happy to see younger investors here. He earns 50,000 rupees a month. He's got a lot of shares from his grandfather, which he has bought in the IPOs. He wants to know if he should redeem that and get that money into a mutual fund.
See, I personally think if you have a job for yourself, the fact that you're earning a 50,000 rupees at the age of 23, I'm sure that job is keeping you occupied. And direct equity should never be left unattended. In my opinion, when we analyze 1,000 different equity funds, being a broker and having information of these 1,000 direct equity portfolios, we have realized that 90% of the times a mutual fund, a good mutual fund, not a mediocre mutual fund, if you have been able to pick the right mutual fund, has beaten direct equity static portfolios. So use your inheritance properly and make sure that you would probably have that money to pass it on to the next generation.
All right, so that's about does it. We'll just end with one last question because this is something that needs to be clarified. Raj Palrecha writes in to us and he wants to know the difference between a mutual fund and an SIP. Raj, first things first, a mutual fund is a set of stocks actually which you can invest in as a basket, which is managed by a professional fund manager, and an SIP is a systematic investment plan. But Firoz, over to you to actually clear this once and for all.
Correct. So a systematic investment plan is a method of investing in a mutual fund. So mutual funds, you can directly invest all your money at once, or your future earnings you can commit. So the method of investing is what is a lump sum investment and an SIP. Both the monies go into the same thing, which is the mutual fund. So they're not any different. They're just the modes of investment. Lump sum, or in a systematic way you're committing your future earnings. But I want to leave it with the thought saying that as a country, we just about 4% of us have invested in mutual funds. If you look at any other emerged country which has gone through this learning curve, has 60-70% of the population investing. And I think it's very important to take the benefit and to make sure India retires rich or meets its goals. Mutual fund is a very, very good vehicle and everybody should actually take benefit of it.
All right, so it's still early days. We hope it picks up. Firoz, thanks very much for joining in and answering all the queries sent in by our viewers. And viewers, thanks very much for sending all those queries. I do realize that a lot of them still haven't been answered, but we'll try and get back to you with those answers. Thanks very much for watching.